days before the cabinet will take up the proposal to deregulate the sugar prices, Ashok Gulati tells ET Now that the sugar pricing should be through revenue sharing formula and deregulation will bring the prices down.
What we have recommended is that there should be a clean dismantling of most of the controls. Levy system or monthly release system and all those have to go. And on the pricing front, which is a crucial factor, we have recommended that you need to go by revenue sharing formula rather than through at present the state advised prices, which create many a times distortions at the state level.
The cabinet is most likely to take up this issue this week. Would you say that these proposals will see the light of the day?
Well, let's hope. I'm hopeful that something positive will happen.
Some people say that this kind of deregulation will, give rise to more inflation. And today we have seen data where rural inflation is rising, urban inflation is rising. Almost everywhere prices are going up. How do you think that this policy will deal with that?
No, I don't think that the prices will rise because of deregulation of sugar. In fact, the chances are that the prices will come down. But what it will do is bring greater efficiency and greater viability into the industry. And at present, as you know, in UP and many other mills, there are a lot of, cane areas that are building up, which is not a healthy sign.
Let's also get another view then, and Vijay Iyengar, Chairman and Managing Director at Agro, now joins us on the show. Mr. Iyengar, hi, welcome to the show. India is headed towards the sugar partial decontrol. The industry expects the policy changes in this week itself. What's your view on the impact of the same on the Indian industry and prices, and any impact that the global calculations also are making?
Indian industry has been clamoring for this deregulation for quite some time now. So as far as they're concerned, it's a welcome move. Of course, it means that there won't be any levy sugar as well as sales quota. So individual factories will have to manage their sales program right through the year. I think domestically, price-wise, you might find that there is a bit of volatility, but probably each individual unit will have to learn to manage the volatility and take recourse to means at their disposal to manage this phenomenon. Globally, I think the Indian regulator or the Indian authorities still are holding one tool at their disposal, which is the export tax mechanism. With that, they can regulate the flow of Indian sugar into the world market. And as a result of which, I think there may be occasions during which Indian sugar will flow to the world market, and at other times when it may not make sense for Indian sugar to hit the world markets. Of course, it'll be good if the authorities actually give some certainty to the export tax mechanism, which means that the industry would be more certain of what are the kind of price fluctuations that they have to deal with.
Your one point is well taken onto that one, but there are concerns on high food prices in India as well, with at least 4 states facing drought-like situations. Which crops would you be concerned about?
From what I can see, the drought scene in Marathwada seems to be the one which is causing the most concern. The major crops in that area are usually, you get pigeon peas, which is already reflected in the prices of pigeon peas in India moving up, as well as there has been some movement of pigeon pea prices in Myanmar as well. This trend is expected to continue. There were some issues about sugarcane in southern Maharashtra as well as northern Karnataka, and this, I think, has been made up by better output possibilities in northern Maharashtra as well as in the state of Uttar Pradesh and Tamil Nadu. So probably sugar, you may not see the impact, but definitely in pulses like pigeon peas, you will see an impact.
Vijay, also with China inflation at 10-month highs and the recent trade data readings, how do you see the food imports from that big consumer and any impact in the international prices in grains?
You see, China has just had a new government. So obviously they want to make sure that inflation is contained under their watch. particularly as they have just taken charge. I would expect China to continue food imports. You see, in cases of soybean, for example, they've been continuously buying. They have got a positive crush margin, and they have really been keeping world markets buoyant. In a commodity that I mentioned during the course of my last interview, which was sugar, where I did expect world prices to move up, which they have done. The Chinese have been importing, adding to their buffer stock. So you expect that phenomenon to continue.
With your last question then, and how would you look at the grains like wheat, corn, soybean prices in the near term?
Soya has had a very, very good run. I expect soybean prices to come off their recent highs, particularly keeping in mind, one of the reasons why soya has been as high as it is because the Chinese have been continuously buying from the US. There have been huge congestion building up at various Brazilian ports, which have prevented Brazilian goods from hitting the high seas and moving towards China. This situation definitely will ease in the next month or so. So I expect soybean prices to come off. I do expect corn and wheat prices to either maintain or move up gradually. Wheat particularly because it's seen some fairly significant profit taking over the last month or so. So I definitely see wheat prices moving up gradually.
All right, Vijay, we'll let you go at that. So the wheat prices are up, soybean prices can come off their highs is the view coming in from AgriCorp in the markets today. Vijay, coming to you then, and before we end this segment, how are you looking at the turmeric prices? I mean, nearly an upper circuit coming in for that one today.
Manisha, in line with what we spoke yesterday, you pointed out the kind of bullishness that was seen in the spices segment. I spoke about how spices and after the spices complex, the grain complex, etc., are moving up in rotation. So you are seeing a 4% up in turmeric. I think it'll cool down in the next 1 or 2 trading sessions. Although the overall picture does remain positive, it'll then be the turn of some other spice after a couple of trading days. So I would remain optimistic on all agri commodities. In terms of fresh buys, I think I would want to wait for declines to the 6,625 to 6,650 odd levels before attempting to buy again.
All right, so it's in rotation, and today it really is the turmeric prices upper circuit coming in for that one in the trade.